Now, China and Hong Kong stocks were the top performers among global peers today. This has happened after the authorities in China announced measures to revive the real estate sector in the communist country. The government has now released a 16-point playbook for financial officials, and these pointers are aimed at helping both developers as well as buyers. How is this going to impact the Chinese economy is the question, and that's what we're explaining today. Well, buying a house is a dream for many, whether you're in India or in China. And when you have paid a developer with your life savings, the anxiety can be real. China's real estate came down crashing a few months ago. This happened when the government limited debt to developers. So when debt was limited to developers, many found it impossible to complete projects which set off this chain of events that hurt the Chinese economy greatly. 70% of China's GDP relies on the real estate sector. And when developers lost the ability to give home buyers their properties, it led to buyers losing confidence in the sector and the entire real estate sector of China. So housing sales touched all-time lows. Several Chinese mortgage home buyers started defaulting on their commitments too. Now, China has announced, like I said, a 16-page playbook to finance the ailing real estate sector. It includes packages for buyers as well as developers. And the first point lays out rules to financiers to treat state and private developers equally and support those who have sound corporate governance. Since the issue started with developers, helping developers is of paramount importance to give the industry the boost it requires. The country also aims to give a fillip to the economy by giving first-time home buyers an edge. China's megacities, they've grown because of an influx of migrants from other parts of the country. Incomes have increased along the middle class, and this has happened in recent times. But the ability to own a property in some of the major cities, that remains a dream for the common man. China's society places great emphasis on owning property. Several people have invested in property despite the high mortgages. But China's zero-COVID policy has disrupted manufacturing and several other key industries where the majority of the Chinese population have been employed. And this, all of it, has led to a lot of people losing employment. Now, the country aims to restructure debt of such people in an effort to give them stability and provide a layer of protection to the banking industry. People invest in homes to give them stability through tough times. But in China, the debt commitments have made people more vulnerable than ever before. And those who fail to service debt have seen their creditworthiness plummet to record low levels, which makes owning property harder than ever. But now the government has announced some relief in the form of credit score protection as well. The Chinese government has also announced a slew of other measures that could give the sector a boost, and among them is to extend loan repayment tenure for developers, which ensures that they can concentrate on finishing their projects on priority and on time. Lenders have been asked to prioritize funding for residential projects so the end user, the common man, is not affected. Lenders have also been asked to oversee the acquisition of weaker developers by stronger ones, so the country's financial fundamentals improve in the long run. Those, in a nutshell, were some of the highlights of the 16-point plan, that playbook that is aimed at reviving the real estate sector in China. And markets have applauded it. They've cheered this move. But the question is, will it increase demand among buyers, especially considering that home buying is still a dream and a distant dream for many, also a very costly dream that involves a lifetime of debt.